Hi, and welcome to the show where we reveal the sneaky side of the banking industry, which loves to take advantage of us all. Now, I know what you're thinking. Fainalent talking about banks? That's even more thrilling than watching paint dry in a library basement. And yes, you're not wrong. But stick with me, because today we're diving deep into the murky depths of how banks are stealing your money in your account, and more importantly, what you can do to protect yourself. We're talking hidden fees, sneaky charges, and enough financial jargon to make your head spin faster than a Wall Street roulette wheel. Think of your bank account as a delicious bag of chips. You open it up, expecting a satisfying crunch and a burst of flavor, but instead you find it half empty, filled with those useless nitrogen-filled pouches. We're here to expose those pouches, those financial loopholes that banks don't want you to notice. So buckle up, grab your financial statements, and get ready to learn how to protect your hard-earned cash from the subtle yet pervasive tactics employed by those friendly neighborhood banks. Let's start with the most blatant and yet often overlooked culprit: monthly maintenance fees. You know, those pesky little charges that banks love to slap onto your account like an unwanted parking ticket. They'll tell you it's for the privilege of having access to your own money, which is about as logical as charging rent for the air you breathe. And don't even get me started on minimum balance requirements. These are like financial hazing rituals designed to punish those who haven't reached a certain level of wealth. Fail to maintain the minimum balance, and bam! You're hit with a fee that would make even a loan shark blush. It's like going to an all-you-can-eat buffet, paying a hefty entrance fee, and then being told you have to weigh at least 200 pounds to actually eat anything. It's absurd. And yet millions of people are subject to these predatory practices every single day. But fear not, because in the next section, we'll expose even more insidious fees lurking in the shadows, just waiting to pounce on your unsuspecting bank account. Now let's talk about everyone's favorite financial trap: overdraft fees. You know the drill. You accidentally overspend by a few dollars. Maybe you miscalculated your grocery bill or forgot about that automatic subscription renewal. Suddenly, you're hit with a fee that's disproportionately larger than the amount you overdrew. It's like being fined $300 for accidentally jaywalking across an empty street at 3 a.m. The punishment simply doesn't fit the crime. And here's the kicker: banks know these fees are outrageous, but they rely on them as a significant source of revenue. In fact, overdraft and insufficient funds fees generated over $15 billion in revenue for banks in 2020 alone. That's a billion with a B. It's a predatory system that disproportionately affects low-income individuals and those living paycheck to paycheck. They're the ones who are more likely to overdraft their accounts and get caught in this vicious cycle of fees upon fees. But wait, there's more. Banks often process larger transactions first, even if it means pushing smaller transactions into overdraft territory. It's like rearranging deck chairs on the Titanic, except instead of an iceberg, it's your bank deliberately sinking your finances. Alright, let's move on to another financial black hole that seems specifically designed to suck the joy out of your life: credit card debt. We've all been seduced by the siren song of buy now, pay later, but the reality is far less glamorous. Credit card companies lure you in with flashy rewards programs and introductory offers, only to slam you with sky-high interest rates once the honeymoon period is over. We're talking interest rates that would make even a used car salesman blush. These interest rates can quickly turn a minor shopping spree into a mountain of debt that feels impossible to climb out of. It's like trying to outrun a cheetah while carrying a refrigerator on your back. The odds are simply not in your favor. And the worst part? These high interest rates disproportionately impact those who can least afford them. People with lower credit scores or limited financial literacy are often charged higher interest rates, creating a vicious cycle of debt that can be incredibly difficult to escape. But don't despair just yet, because in the next section, we'll explore the sneaky tactics banks use to keep you trapped in this high-interest hellscape, and most importantly, how to break free. I know what you're thinking. This is all very depressing. Can't you offer a glimmer of hope in this financial hellscape? And to that, I say, of course! But first, we need to understand the enemy. Banks love to bombard you with confusing financial jargon, like APR and variable interest rates, hoping you'll just nod along and sign on the dotted line. It's like trying to decipher ancient hieroglyphics while being chased by a swarm of angry bees. They'll entice you with low introductory rates, only to jack them up after a few months. It's like being offered a free trial of a streaming service, only to find out they've been automatically charging your credit card an exorbitant fee for the past year. And don't even get me started on those pesky minimum payment traps. Paying only the minimum each month might seem like a good idea, but it actually keeps you in debt longer and costs you significantly more in interest over time. It's like trying to extinguish a raging inferno with a teaspoon of water. It's simply not going to cut it. But fear not, because we'll arm you with the knowledge and tools you need to navigate this financial minefield and reclaim control of your hard-earned money. You know how banks are always encouraging you to save money? They talk about it with the enthusiasm of a golden retriever who just discovered a rogue tennis ball. But here's the thing, they're not really giving you a reason to be excited, because while you're diligently putting aside your hard-earned cash, those savings accounts are often earning interest at a rate that would make a snail blush. We're talking about interest rates so low they could practically apply for government assistance. Meanwhile, inflation, that delightful phenomenon that makes everything more expensive, is happily gobbling up the value of your savings faster than a room full of toddlers at a birthday party. It's like your money is on a treadmill, desperately trying to outrun the rising cost of, well, everything, and just ending up exhausted and in the same place. And let's be clear, banks aren't offering these measly rates out of the goodness of their hearts. They're taking your money, lending it out at much higher rates and pocketing the difference. It's like they're running a delicious lemonade stand with your lemons. But instead of sharing the profits, they're handing you back a single, pathetically dry lemon wedge. So, while the banks are out there throwing lavish parties with their ill-gotten gains, you're stuck with the financial equivalent of lukewarm tap water. It's enough to make you want to stuff your cash under the mattress. But don't worry, we'll get to better alternatives later. You might now be thinking, isn't any interest better than no interest? And to that I say yes, technically you're not wrong. Finding a penny on the ground is technically better than finding nothing. But let's not confuse technically better with actually good. These paltry interest rates barely keep pace with inflation. It's like trying to climb Mount Everest with a broken shoelace. Sure, you might be moving upwards but not making significant progress. You're probably going to end up frustrated and exhausted. And that's what these banks are banking on. They're hoping you won't notice or look for better options. They're counting on you to accept these dismal returns. But here's a revolutionary thought. You don't have to. You deserve better than a 0.01% interest rate. Let's discuss compounding fees next. Because, as we all know, banks love nothing more than a good ironic twist. Banks offer low interest rates on savings, but it gets worse. They've mastered the art of something called the compounding fee. It starts simple. You miss a payment, or your account balance drops below zero, and bam, overdraft fee. But it doesn't stop there. If you don't repay quickly, interest starts piling on top of that fee. In some cases, late fees or additional penalties can stack up too, creating a snowball effect. You're no longer just paying back what you owe, you're paying back what you owe, plus fees, plus interest on those fees. It's like getting a parking ticket, forgetting to pay it, and then getting hit with fines on top of fines. But don't despair. We'll show you how to spot and avoid these sneaky charges before they drain your account. The good news is, there are ways to fight back against these predatory practices. The first step is to be aware of the fees your bank charges. And I'm not talking about just skimming the fine print. I'm talking about grabbing your magnifying glass, putting on your detective hat, and really delving into the depths of your account terms and conditions. Look out for fees on everything from overdrafts to ATM withdrawals to simply having the audacity to exist as a customer. Because, let's be honest, banks would probably charge you a breathing fee if they thought they could get away with it. Once you know what you're dealing with, you can start making informed decisions about your finances. Set up overdraft protection, explore alternative banking options, or, and here's a novel idea, try not to spend money you don't have. The key is to be proactive. Don't wait for the fees to start piling up before you take action. Remember, knowledge is power, and in the world of banking, that knowledge can save you a whole lot of money. And who knows, with all the money you save on fees, you might even be able to afford that life of off-the-grid bartering and interpretive dance after all. Alright, now let's talk about loans. Loans let you buy things you can't afford now, but you pay them off with interest. Not all loans are bad. Sometimes you need a loan for a house or car, but some banks don't play fair. Predatory lending practices can trap you. Hidden fees and high interest rates. They target those with low credit scores, promising quick cash but hiding true costs. We're here to help you avoid these traps. Protect yourself from loan sharks in suits. Do your research. Compare loan offers. Focus on interest rates, loan terms, and fees. Beware of early repayment penalties. Ask questions and negotiate terms. Seek advice from a trusted financial advisor. Knowledge is power. All right, let's dive into the thrilling world of currency exchange, where banks play a little game I like to call hide the markup. They offer you an exchange rate that sounds official, but it's far from the market rate. You hand over your money and boom, they've made a tidy profit. Regulations exist, but they're as effective as a chocolate teapot in a heat wave. Protect yourself from currency exchange con artists. Do your research. Check market rates online. Use xe.com or Google Finance. Consider traveler-specific services. They offer better rates. Cut out the middleman. Get a multi-currency account or travel-friendly credit card. Avoid foreign transaction fees. Negotiate with your bank. You might get lucky. We've all been there, haven't we? That moment when you realize you've had enough. Enough of the constant nickel and diming, enough of the hidden fees, enough of the general feeling that your bank sees you as nothing more than a walking, talking ATM. You decide to do the unthinkable, break up with your bank. But like any toxic relationship, it's never as simple as just walking away. No, banks, those wonderful institutions built on trust and customer service, love to throw a few parting gifts your way. And by gifts, I mean account closure fees. That's right, some banks have the audacity to charge you for the privilege of closing your account. It's like paying a cover charge to leave a party where the only drinks they serve are flat soda and lukewarm tap water. And the worst part? They often bury these fees in the fine print, hoping you won't notice until it's too late. But wait, it gets better. Some banks also have the gall to charge you inactivity fees if you haven't used your account in a while. It's like they're punishing you for not constantly feeding their insatiable appetite for fees. How do you escape the clutches of your bank without emptying your wallet? Be prepared. Read the fine print. Check for minimum balance requirements. Negotiate fees. Consider switching to a credit union or online bank. They often have lower fees and better service. Investing. The grand game of trying to make your money work for you, preferably while you lounge on a beach somewhere, sipping something fruity and pretending to understand the stock market. Sounds idyllic, doesn't it? Well, hold on to your mojitos, because things are about to get real. You see, the financial industry, in its infinite wisdom, has decided that investing should be like a trip to an all-you-can-eat buffet. But instead of food, it's fees. Management fees, advisory fees, custodial fees, administrative fees. The list goes on and on, like a broken record of financial jargon designed to make your head spin. And the worst part? These fees can eat away at your returns faster than a pack of rabid hamsters on a Cheeto binge. Think of it like this. You invest $100, and over time, that $100 grows to, say, $150. Not bad, right? But wait, there's more. After deducting all those pesky fees, you're left with a whopping $110. Suddenly, that dream of retiring early and buying a private island starts to feel about as realistic as a unicorn riding a roller coaster. How do you avoid becoming another victim of investment fees? Knowledge is power. Do your homework. Understand the different types of fees. Ask questions. Be clear on what you're paying. Consider low-cost options like index funds. Investing is a marathon, not a sprint. Focus on a diversified portfolio. Right, so you're buying a car. Congratulations, it's a big purchase. But just when you think you're done, the bank slides you loan insurance paperwork. It's here to protect you, or rather, their profits. Most of the time, you're already covered by your regular insurance. It's like buying a second fire extinguisher when you already have one. So, how do you dodge this insurance-shaped bullet? Don't be afraid to say no. Banks make it sound mandatory, but it's not. Stand your ground. Read the fine print. Shop around for insurance yourself. Remember, banks are businesses. Be vigilant and ask questions. Terms and conditions. Those delightful walls of text that no one reads, yet everyone blindly agrees to. Banks are masters of this dark art, burying crucial information in a labyrinth of legal jargon. If you don't understand how they're taking your money, you're less likely to complain. Just focus on key areas like fees, interest rates, and any tricky clauses. How do you fight back against legal jargon? Ask for clarification in plain English. Use technology to analyze documents. Consider consulting a professional. Knowledge is power. Understand your financial products. It's like learning a new language. And trust me, that's a satisfying feeling. Well, there you have it. A whirlwind tour of the many creative ways banks are trying to relieve you of your hard-earned cash. From hidden fees that lurk in the shadows like financial ninjas to complex terms and conditions designed to make your head spin, it's a minefield out there. But don't despair. By being informed, asking questions, and standing up for your rights, you can protect yourself from these predatory practices. Remember, banks are not your friends. They're businesses, and their primary goal is to make money, even if it means throwing you under the metaphorical bus in the process. So, stay vigilant, read the fine print, and don't be afraid to tell your bank to go take a long walk off a short pier if they try to pull a fast one. After all, it's your money, and you deserve to keep as much of it as possible. And if all else fails, you can always invest in a good mattress. At least, it won't charge you overdraft fees for sleeping on the job. Thanks for watching. Make sure to read the fine print, compare bank products, monitor your accounts, negotiate with your bank, and consider online banks to protect yourself from these practices. Don't forget to like, share, and subscribe for more insightful videos.